Hello, my name is Troy White. I'm with the firm Hoodoo Financial. Today, what I am talking about is the importance of social impact investing. So, your first question is, what is social impact investing? I'm going to let you know. Social impact investing is investing your money in such a way that you are making an impact on society. Often you have heard the issues where, like, save the whales, save the rainforest, um, stop killing dolphins or something like that, right? So those social issues, those are social issues, and there are people who invest in such a way that they support those issues. If you have an issue, you want to support that. And fundamentally, you need to invest what you value in. And social impact investing helps you do that. So if you have a social issue like save the whales, what that means is you would refuse to invest in companies that support this negative activity that you disagree with. So killing whales. You won't invest in any company that has something to do with killing whales. Now, how is that relevant to an African American population? Well, it is very relevant because we need to make our dollars speak for us. You need to invest in your values. And I would ask you a question. I'll pose this question to you. Are you currently investing in such a way that you are contributing to your own demise? Are you investing in such a way that you contribute to your downfall? Are you contributing to our social ills by investing? All right, let's dig a little further. So first, let me tell you how this even came to my purview. How did I become aware of social impact investing? And it's something that's been on my mind since the early 90s. I'm from Oakland, California. There was a television show it was a talk show that used to come on out here. And it was on Channel 5 called People Are Talking. It was a CBS channel. Jesse Jackson came on there. And, I'm down for Jesse. Anytime Jesse Jackson has something to say, I'll listen. So at that time, he was on a tour, speaking tour, talking about the activities he was involved in with the Rainbow Push Coalition. And what they were doing is buying stock in corporations. And since they own stock, that gives them the right and the ability to go to the shareholders meeting for that particular stock that they own. And they only purchase stock in companies that they wanted to have some sort of say-so. And from what I remember of this talk show, he was discussing that he was interested. They were buying stock of companies who they had a problem with. So any particular company that is doing some sort of activity, some sort of action that is detrimental to the African American community, well, he was buying the stock and going to the shareholders meeting and raise hell, speak his mind, tell him that he's not, he doesn't appreciate these negative things that these companies are doing. And Jesse Jackson is bringing the media focus as well. So this was shining a negative light on these companies. And, it was making them react, come up with some sort of solution to a way to appease Jesse Jackson. So that's what stuck in my mind uh, back in the '90s, and it's been in my head ever since. Um, Obviously, it was something that I was already interested in, but it helped to solidify the concept with me a little bit. So, social impact investing is investing in such a way that's going to support the issues that you have. So the social issue, the political issue. So let's go over some of the methods first off. And some of the methods of social impact investing um, pertain to what we're trying to accomplish. So let's just dive in and start talking about it. So let's talk about community redevelopment. So I'm from Oakland, and in Oakland, we have physical infrastructure and buildings that are identical to those in San Francisco. Physically, the houses, the history is the same. So the properties and specifically the retail and commercial properties uh, are basically the same. So when I would go over to San Francisco, it struck me as odd that, wow, this neighborhood looked just like my neighborhood. Yet all of the businesses are vibrant. Um, all of these storefronts have stores in them, and people are actually going in these stores and patronizing these businesses. And there are, cafes and restaurants and shops all up and down the street. And there are, tables and chairs sitting out in front of these shops and cafes, and people are enjoying conversations and meals and coffee and lunch. And this is odd to me because the identical type of property physically looks exactly the same. Physically, this neighborhood looks the same as in San Francisco as it does in Oakland, in my own neighborhood. But in my neighborhood, the stores are closed. There is no cafes. There's nothing. All of these storefronts, all these retail spaces are shut down. And it's thugging going on this street. There's nobody sitting in front of this shop having a nice meal, enjoying a cup of coffee. They would be scared to sit right there and have coffee. It's like, even with me standing there, why would I want to sit here and have some coffee, man? I want to go somewhere where it's no thugs standing around, and I don't want to hear beats slumping as the cars drive by. I want a nicer ambiance. And so we tend to go somewhere else to have a cup of coffee and, eat dinner or something. And so what I'm saying is it was not occurring in our neighborhood. But yet there's no physical difference here. So what's going on? What's the difference? And so how that relates to social impact investing is that in these rundown, underutilized neighborhoods that are our African American neighborhoods, well, it's up to you to become a social impact investor and redevelop the neighborhood. So, methods. In this scenario, when it comes to community redevelopment, the method that you would use to do social impact investing would be fix and flip, possibly fixing it up, buying it and holding it. But and other doing some other form of property development, whereas maybe there's a dirt lot somewhere, put something that's worthy right there. And basically what it is it requires us to redevelop our own community. We hear a lot about that buy back the block. you know well, you the only one that's gonna do it. Buy it back. Let's get it. And it's idle. It's sitting there idle right now, which leads to negative ramifications in the neighborhood. If there's no shops and there's no activities, then there's also no jobs, and the activities will be negative. If there's no positive activity, then it's going to be some negative activities around there. But then also, what shops and stores are in the neighborhoods that I'm speaking of? Liquor stores, right? Payday lenders, check cashers, fast foods. We got them all day in the neighborhood. But when you go to a neighborhood that has some sort of some culture to it, some style, some unique qualities, where it's not gonna have McDonald's, it's gonna have some sort of family restaurant there. It's not gonna have a check cashing spot. We need a bank. We need real financial institutions in these neighborhoods, that are going to help the community, not extract resources. We need companies that contribute. And all right, we on the methods, and right now we're just discussing community redevelopment. There are other forms of social impact investing that I want to get to, but I just don't want to leave these out. So, one method of community redevelopment for the purpose of social impact investing is to fix and flip and buy and hold improving properties within your community. That's a way to redevelopment. Won't you lease the space and put a restaurant in there? You keep talking about your greens are the best greens. Ain't nobody greens as good as my greens. Your greens better than grandma greens. You make all this good potato salad. Everybody think they make the best greens, the best potato salad, and the best gumbo, right? And so if you do, then set up shop and do it. That's one way for community redevelopment. That's one method. Entrepreneurship in general. And what I mean by that is, when we have this long stretch, and we got Chinatowns, we got Italian neighborhoods and all that, but there's no African American town, right? Well, it can be. We just need to put it there, and doing so requires you to do it. You don't have to be the only one, but you have to be one of the ones. There's not going to just be one entrepreneur that's going to save us all. In fact, nobody is going to save us all. Everybody got to do something. And ain't nobody going to do nothing just for the sake of saving the whales, right? The only reason that you're going to engage in an entrepreneurial endeavor to redevelop the community, to have an impact on society through your investments, the only way that's going to occur is if you benefit. Nobody does nothing for nothing. If you ain't getting paid, you ain't going to do it. So that's just fundamental. So let's just understand that. Let's accept that. So what I'm saying to you is, we can revitalize this neighborhood right now. All you have to do, well, I ain't going in all these all you have to do is because that's phony. Basically, you have to become an entrepreneur, and you have to open you a business in the neighborhood. And so you do it, and 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 you do it. There's only 10 storefronts right there. It might be a 2 or 3 block stretch. It's only about 10 storefronts. So we only need 10 of us to go right there and set up shop. We only need 10 of you to go over there and become successful. We only need 10 of you to go over there and make some money. Do 10 people want to do that? And when I say over there, you know where it's at, in your neighborhood, in your city, in your town. You know it's a formerly thriving neighborhood that ain't no more. That's where you need to go. Get 10 friends, go to a meetup group, an entrepreneur meetup group in your town, wherever you from. They got a meetup group there that are entrepreneurs. If they don't, start one, but they got one. Go on there and look. Go on meetup.com and look for an African American entrepreneur group in your area. Go there, and all of y'all need to find a neighborhood and hit it. Lease the space, set up shop. All right. Also, part of it is also requires you to patronize the businesses in this redeveloped area, in this area that we have slated for redevelopment, this area that we have bought back and we are returning to a Black Wall Street. Well, that means we got to go there and spend, right? So patronize those businesses, and you have to create one of those businesses. Stop being scary. Go ahead and do it. All right, so that's the community redevelopment aspect of social impact investing. To recap on that, we need to redevelop our communities. Redeveloping our communities to make a social impact is social impact investing. All right, that's one method, right? That's one way. Now I want to talk about social impact investing with stocks and bonds. How do I do social impact investing with stock and bond? Well, this is really the greatest way. And let me jump ahead and tell you the other way I'm going to discuss is crowdfunding and peer-to-peer lending as another method. But this about to be, I might get stuck right here, stock and bond investing. So to have a social impact on our investments means that we're going to give proactive support to the companies that support us. If that company is doing positive things for your community, for the African American community, or for whatever that issue is, social impact issue that you have, if this company is making positive moves in that area, then we need to make positive moves towards that company. How do I do that? Well, show your support. Buy them. If you feel, I'm going to use this example. Well, hold on. I'm going to use that. I'll use that one next. All right. If you feel that this company is one that supports Black people, then Black people need to support this company. So that means buy their stock. And when you remember, when there are more buyers than sellers, the price go up. When there are more sellers than buyers, the price go down. That's anything, anywhere, anytime, right? Not stocks, not just stocks, not just bonds. Whether you selling your car, imagine you selling your car for $1,000, and it's a line of people right there that want to buy your car. Well, the price is going up because whichever one of y'all gonna give me the most is the one that get it. So we have to have that same tactic when it comes to investing your dollars in stocks and bonds. So asset exclusion is the method that you can use to have social impact investing in some investment accounts. In mine, they do. In my firm, if you're one of my clients and it's a company that's not cool, we shut them down. We cutting them out. They can never be purchased in your account again. At the other firms, I don't know how they do it, but you can still have somebody monitor their account. You can monitor it yourself, and whenever that stock gets in there, you just tell them to sell it. But what my firm invests in portfolios, or my clients invest in portfolios that we design for them. So we can do asset exclusion. Now, let me tell you, what am I talking about? All right, let's take that example of Starbucks. Starbucks is a great company, right? And let's say you own Starbucks. This is how social impact investing can work collectively. And as we know, marching ain't enough. I was gonna say it ain't doing nothing, but it does something. It gets attention, but it's not enough. Marching for these issues that impact the African American community, and we go protest and we go march. Well, we need to be able to support that as well. We need to have other methods to support our activism and our protesting. So we need to protest with our money. Just something my mother used to say. I shouldn't say my mother. People used to say, right? And that is, money talks and bullshit walks. So what I'm saying is, when it comes to investing in a company, they don't care what you say. They don't care you marching about something. But money talks. If I take money out their pocket, okay, yeah. But y'all people marching, they feel that's bullshit. They don't care about that. But once you start extracting dollars out of their pocket, you're making them lose money instead of make money. Well, that's gonna have an impact. That's gonna get some reaction. That's gonna get some action. So that's fundamentally what we need to do with social impact investing from stocks and bonds. So I said Starbucks. I was gonna tell you that. Use them as an example. Remember that they had those two dudes that was in Starbucks, and they are about to meet on some business stuff, and they're waiting for the third party to show. Well, there was some haters in the store that was, you gotta go, you bad, we don't want your kind up in here. And so after that happened, what I'm trying to say is we need to punish them. So I told you earlier, I said we need to support the good doers with our dollars. Those who are kind to us, we need to be kind to them. If they support us, we need to support them. Now, if they do bad, we need to punish these fools. We need a no tolerance policy. We need to shut them down. And how we do that? Starbucks. So they discriminated against one of ours, and it came to our attention. Well, then immediately we need to start dumping their stock. So for my clients, I just hit a button and enter the stock symbol. It's asset exclusion. I am excluding that asset from your portfolio. We selling. So when there's more sellers than buyers, what I just say, when there's more sellers than buyers, the price go down. So that means if we owned Starbucks and then we ready to dump them, when we can tell them, say, Starbucks, we don't like what you did. You better rectify this situation. And, we sit back and see what they got to say about that. If we're not satisfied, it's out of there. We're excluding that stock. We're selling. We're dumping you. Again, more sellers than buyers, the price start going down. Now, the stock market is known to be an emotional market. You remember when you was in school and people just start running over there to a crowd. Well, we knew, it must be a fight. You go run to see the fight. Well, that's the same as the stock market. Once people start selling and it start going down, the emotional market starts getting scary because they're not as smart as you. They don't do wise investment decisions. They don't make wise investment decisions. They run with the herd. They see everybody selling. They say it must be something wrong. I'm selling. So people tend to follow the pack when it comes to the stock market. As the price go down, everybody want to bail out on the way down. That's the wrong thing to do. That's what people do. And so if we started that flood, hey, it's going to continue. And so that's how we need to punish these corporations for disrespecting us and for doing anything opposed to our agenda, anything that is in opposition to our best interests. We need to shut them down. Now that's how we need to treat stocks. Now bonds is a different animal, and we need to treat it differently. So social impact investing with bonds, how we doing that? And what's the concept now? What's the logic? All right, I want to talk about municipal bonds first. First of all, you got to understand what a municipal bond is, right? A muni, you might have heard it called a muni, municipal bond. So a municipal bond is a bond issued by a municipality, like your city, your county, or your state. And it is usually to fix something or to build something. So, they got, I hate the Raiders. Let me say that. It just came to my mind. I hate the Raiders because they move into Vegas. So me and the NFL is over with. So when the Raiders came back to Oakland, before they was traders, we had to do we had to rebuild the Oakland Coliseum. So we issued a bond for $300 million to rebuild. They didn't even rebuild it. They added on to it. They just made it bigger. And so that's one of the reasons they're leaving now. They don't like the stadium. So they issued a bond. Our county issued a bond for $300 million. And so we still owe $100 million on that bond, and the Raiders is up out of here. So we ain't even got a way to earn back the $100 million to pay for the stadium that they had us spend more money on than when they came back. So kick rocks, get up out of here. Anyway, I'm sorry for going off about the Raiders. So anyway, so that's what a municipal bond is. The county issued a bond so they could raise $300 million so that they could build the stadium. So that's what's happening in all your cities that still got teams. All the teams are saying, we want a new stadium. So they'll issue a bond out, your municipality, say, hey, they're going to leave if we don't build another stadium. Please, 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 let us issue this bond. And so that's putting the municipality on the hook for the money. So if the money don't get paid back, it's going to come out of the tax money. So what that got to do with social impact investing? Well, they issued a bond, but investors purchased the bonds. So you will buy a bond, and this bond will be, let's say it's $1,000 increments, right? So you spend $1,000, you buy a bond, they're gonna pay you, 4% interest. It's a 30-year bond, 20-year bond, 10-year bond, whatever. So, I don't want to go into the nuts and bolts of bonds, but from the standpoint of the social impact investing, how we're going to use it is you're going to invest in what's important to you, and what's important to you should be the infrastructure in your town, in where you're at. So, from a standpoint of municipal bonds, when there's a bond issuance to revitalize this area of the community, or to sometimes your city may have a bond issue that to give money to storefronts to improve their facades, to fix the roads, to build a new school. The list goes on and on, but what is important is for you to understand what this issuance is about. And that's what I'm telling you. That's what you need to invest in. If this municipal bond is to build something or repair something or invest in some way in the infrastructure that impacts you and what's important to you, then you need to invest in that. Similarly, if it is something like a sports team to build a stadium to pay the billionaire owner some more money to let him, mooch off your tax dollars, then say no. That's how I feel now that we ain't got no more football team. So I'm against all them stadiums. I ain't even going to get on to that no more. All right, that's municipal bonds, right? So basically you need to support your own infrastructure. And then there are, let's talk about corporate bonds. So corporations issue bonds so that they can partake in some sort of activity. So let's take AT&T or something like that, Sprint, AT&T. So they may issue a bond, 100 million or something, because they're getting ready to wire your whole downtown area or wire the rural area by you, because a lot of rural areas don't have Wi-Fi and all of this. And that's because the telecommunications companies have not put the infrastructure out there yet. So to get the money to do that, they don't reach in their pocket. They reach in your pocket. So they'll borrow the money